And with that, ladies and gentlemen, we're ready now to commence our session on affordable and efficient cross-border payments, cost versus speed. We have our panelists, our esteemed panelists right here amongst us, and I do request each and every one of you to kindly welcome them with a round of applause. Ladies and gentlemen, I take the pleasure of inviting up on stage Mr. Mayank Goyal, the founder and CEO at MoneyHOP. A big round of applause. Thank you so very much, sir. And Mr. Mayank now will be joined by all our esteemed panelists. I welcome up on stage our speakers, Mr. Aniruddha Sane, co-founder and chief business officer at TerraPay. Thank you for joining us, sir. Mr. Dhakal, the co-founder and managing director, IME Group. Thank you very much for joining us, sir. Mr. Martin Grunewald, the Chief Customer Officer at BankservAfrica. Thank you very much for joining us, sir. And Mr. Shobhit Mehra, founder and CEO at BoxPay. Thank you for joining us, sir. Ladies and gentlemen, we've got our panel ready up on stage. Looking forward to commencing the session with each and every one of you in attendance. Once again, for those of you at the far end of the hall, may I request you to come up forward so you can be a part of this discussion. And with that, I hand over to our moderator, to Mr. Mayank. All over to you. Thank you so much.
Thank you guys for being here. I'm delighted to be welcoming my esteemed panelists, distinguished guests, and ladies and gentlemen, to this session about affordability of cross-border payments, cost versus speed. Now, in an increasingly interconnected and global world, it becomes extremely important for us to have a very stable, efficient, and a secure cross-border payment system, and that's what we're going to be discussing today. The folks here bring a wealth of experience from their technological background, businesses, and having built cross-border payments, and they are going to shed some light about the challenges that are faced in the cross-border payments, the opportunities that exist, and the trade-offs that they have to make between cost versus speed while building these networks out. So without further ado, let's kind of get started. I'll probably go around the table. I'll introduce myself and then pass it on to the other folks to quickly give us a couple of minutes about what they do, what their organizations do, and then we can get started. So as our host said, my name is Mayank. I'm the founder of MoneyHOP. We are a cross-border payments and remittance company. We do India to the world and specifically focus on education, helping Indian students who travel abroad make their payments for living expense and education fees. We're a London-registered organization and have been operating in Indian space for close to 3 to 4 years. So that's a brief about myself. Andy, do you want to go next?
Hi, good afternoon. My name is Ani. I co-founded TerraPay in 2015, and just to give you a background on TerraPay, what we have built is a cross-border payout infrastructure. Today, we can process cross-border transactions into 124 countries across 7.5 billion bank accounts, 2.1 billion mobile wallets. And that's in a brief what we do.
Good afternoon, namaste everybody. I'm Mehra Dhakal, co-founder and managing director of the IME Group. We are primarily into financial service business. We have started our business from money transfer. We have started from Malaysia. It's about 25 years back, and we have expanded our business to different parts of the world. We are primarily focusing for the migrant remittance, and we have recently started our B2B business as well. But after expanding the remittance, we are into banking, insurance, digital finance, and fintech as well.
Thanks. My name is Martin Grunewald. I'm from BankservAfrica in South Africa. For those of you that don't know who we are, we're the largest clearinghouse on the African continent. We're a company similar to NPCI, but not nearly as developed as them. And we don't have as many fintechs around us like you guys have here. We also are the clearinghouse for SADC, for cross-border transactions. So the 16 countries across SADC.
Thanks, Martin. Hi, I'm Shobhit, founder and CEO of BoxPay. We are a global payments orchestration firm working very closely with e-commerce merchants. We have more than 200 plus payment methods on our platform, 50 plus currencies. So cross-border is a very natural use case for us, bringing e-commerce companies operating a .com or whatever domain closer to the consumers wherever in the world they could be. Very honored to be part of this esteemed panel today. Back to you, Mayank.
Thank you, guys. A good short introduction. So without further ado, let's kind of jump straight into the questions. And the first thing that really comes to mind is, a lot of the folks here work in emerging markets, and which is where a lot of these frictions of moving the money around exist. But by the very construct of the fact that it's kind of an emerging market geography, there are instances where the regulation takes a bit of time to come up the curve. And in those instances, we've seen some of the fintech startups kind of flirting with the definition of the regulations and kind of having an interpretation which, if I can use the word, suits their purpose. And contrary to that, the very construct of the regulation is to prevent the ecosystem players. So how do we as a panel think, how do we think that this balance can be struck where the compliance and the regulations are protected not just as a tick box exercise, but also in spirit, and still providing a platform for fintechs to innovate? Maybe Hemraj, if you can go first.
Thank you very much. When we are talking about the cross-border payment, of course, the regulation and innovations are very vital to that ecosystem, especially in the emerging country like our area, South Asia. The fintech are basically growing very rapidly, and they are innovating a lot of new products and things. When the regulation and the innovations are talking hand to hand, then only things can be happen in different direction. But always the innovators or entrepreneurs are ahead of regulation. They will bring something, and regulators are coming after them only. So especially in this kind of market, the regulation is challenged to understand the different dynamics, because when we are talking about the cross-border payments, the multiple stakeholders are required over there. Sending side, receiving side, sending organization, receiving organization, the information required for that, transactions, because nowadays the anti-money laundering and counter-financing terrorism are the vital, important factor which needs to be checked out. So the regulation will focus to, control the transaction, whereas the innovators are focused to innovate something. So going forward, I think the regulation and innovation has to be balanced, so that the entrepreneurship can foster, the new ideas will be emerged into the market, so that the business can be transformed into the next direction. When we are talking about the regulations, the regulation has to be more of like risk-based approach, so that the entrepreneurs also has some space to innovate over there. Without the entrepreneurs, without the entrepreneurship, our economy will not be growing into the next phase. So to motivate the entrepreneurs, the innovation is vital. But at the same time, to provide the secured service or security for the consumer, the regulation is also important. So it is tricky, but it has to be balanced to grow the fintech business, and the regulation has to go for the risk-based approach rather than rule-based approach, so that the impact of the compliance will have to be understood over there. I think that's what I wanted to say.
No, thank you. I think that's a good analogy, Hemraj. I think kind of striking that balance is what you're talking about. Shobhit, do you want to add something to that?
Sure, just a couple of things there, right? Like, so as a founder and people, who are building products, it's very important to strike that balance. I think both regulation doesn't mean, if there's no regulation today, doesn't mean there'll not be tomorrow. it's very important to think about that. And as you build and grow, keep that ingrained in the mind that you have to be somewhere, moving money across borders, touching things, and money has power. It can be misused. So, there is a responsibility. So if you ingrain that early on in your journey, that it obviously helps in that longer run. Obviously, also helps build trust in the markets that you operate with, the regulators, with the bodies there, and also with the consumers. So that's super important.
And you obviously work in multiple jurisdictions, and in the course of the time that you've built the company, you of course are regulated in several jurisdictions and kind of have a lot of these interoperable networks. Have you found some regulators taking a different approach versus the others? And do you have any suggestions as to how to go about dealing with the regulators while you innovate?
Thank you. Thank you for that. I think a great concept here about compliance and regulation. So I was in an event day before yesterday, and we were talking about cross-border payments, and we had a very similar topic around future of cross-border payments. I think, and it comes very naturally to us. We've been 8 years into this business. We are regulated, so it's a very unlike fintech kind of in world. We as a fintech have been regulated in 61 countries by the banking regulator. So to me, compliance and regulation is the backbone of cross-border payments. You cannot build or move money unless you take compliance seriously. So it's in a way, what we speak about is cross-border payments is actually the business of compliance. Having said that, how does to go back to your pointed question around, how does this whole ecosystem of being able in this complex world of how currencies, different regulators look at things? At TerraPay, we looked at two pillars. One, we looked at cross-border as compliance, and the second one is trust. Once you have these two pillars coming together, you have a successful cross-border business. And compliance we spoke about. I think the trust is where I think we have been talking about is where various regulators look at cost, look at women empowerment, look at financial inclusion, look at efficiencies. All that come together, and that is how consumers, be it SMEs or be it individuals, build trust to be able to send money cross-border. So to me, I think I will always take a very expansive view around how a regulator, I'm regulated in Singapore. The Singapore regulator has a very distinct view about cross-border versus, say, where we are licensed in Kenya, for example. But the overarching position is compliance and trust. And once you have that, you build an ecosystem, and that's what we're building over 124 countries now. So that's a very high-level position because it's too difficult to pinpoint regulatory positions, but eventually that is where it comes to trust and compliance.
That makes a very good statement, whereby what you're essentially trying to say, if I interpret you correctly, is having, and I think Shobhit also alluded to that earlier, having that compliance ingrained as in when the organization builds up and goes through its life cycle, and building that trust not just with your consumers, but also with the regulators, that you'll end up doing the right thing, is an important factor while the organization is being built. So that makes sense. Now, the next question I had was, I think two of the important factors which determine the cost of remittances is, of course, the correspondent banking network and the network on which the money movement happens. And as in when we get out of this, which we have, the COVID era, and world becomes more digital, we're seeing a lot more gig workers, we're seeing a lot of MLAI play out, which means that the interconnectivity of the money movement will have to increase. And so and majority of the world is dominated, and if I can use that word carefully, by the SWIFT network, and most of the money movement still happens on the SWIFT network. But we're also seeing evolution of the blockchain technologies and DLT networks and so on and so forth. But there's certain governments which are restrictive about whether you can use a Ripple network or not to be able to move the money. Martin, do you have any, given that you have a bunch of countries that you work with in the African region, is DLT the real answer to achieving a lower cost and higher speed? What are the alternatives you reckon we'll be seeing vis-a-vis what SWIFT has done in the last 10, 15 years?
Yeah, I'm glad this isn't a SWIFT conference, so I can answer that one.
Ask her the Cybers next time.
Yeah, we'll skip it at Cybers. Look, I've got a few friends that are DLT and crypto evangelists, and I can spend all night debating with them, and they won't move their view that that is the future. I think maybe if you had asked me this question a week ago before I came here, I may have answered it slightly different. I think we know that the SWIFT system as we know it today is not sustainable. It can't really cater for the kind of cross-border that we are all familiar with. So I think it'll probably be relegated to some sort of B2B commercial transfers, settlement type arrangements in the future. The irony of it is that I don't think DLT and crypto is the answer either. And I think often we almost taking that technology and trying to find a solution for it. I think the truth lies somewhere in the middle. And if you think about what you guys have done in India, I was in a session this morning and learned a lot around just putting down standards and specifications and allowing the ecosystem to actually evolve and play. And maybe that's the future of cross-border as well, is where we don't try and create expensive solutions and switches and all these ring-fence type environments. We also have to try and break down closed-loop monopolies, especially in some regions. So I think the future lies where you create ecosystems where people can play based on standards that they comply to, rather than thinking solution and trying to panel beat something to make it work.
And I think, Annie, we've seen it, especially in the trading world. We've seen organizations like Bank of New York Mellon, who's the largest custodian of the world, deploy blockchain technology and reduce the settlement cycle from T+3 to T+1 and so on and so forth, and in turn, releasing a lot of liquidity from the markets. Have you seen any examples in your space of work whereby any DLT technologies have been used to decrease the settlement cycle and hence provide more liquidity in the market?
Yeah, absolutely. I think just to add to what Martin was talking about, I think just to alluding to what you referred earlier, when you speak about the legacy platforms, and I'm going to be in Cybos, I'm going to still make the same position. The legacy platforms, and if it's a messaging platform, the problem is not about the messaging platform ever. You could send an SMS or a WhatsApp, or a bank can send any of this messaging to any bank in the world instantly. The reason why money takes a while to move from the sender in a way to a recipient is not because that message hasn't gone, it's because of liquidity. And I think that is the key piece of what we need to look at. It's not about just technology. So when you speak about, and I think Ripple in a way is trying to address that. They started looking at technology, but now the real problem in this space is all about liquidity. And to me, if there is instant liquidity, there is instant settlement. As simple as that. And that goes back to the position of being trust. Why do a bank send money to another bank and wait for those 3 days? Because the trust is there when the money actually is there in the Nostro account. That is exactly what TerraPay tried to disintegrate in a way. So the way we looked at our business, and I'll give you an example, is like when we co-founded TerraPay, none of us had ever done a cross-border transaction. And
Very fresh perspective.
it is a fresh perspective. So we challenged everything. We challenged everything. Why would you do this? Why would you do that? And what came out was, if the meaning of this liquidity position of the trust comes on the forefront, then the biggest position was regulatory, so that I'm able to move money in the right way, and I have money available at any point of time. So to me, at TerraPay, 33% of our workforce just focuses on liquidity. And once we do that, what we have been able to do, cross-border, real-time, 124 countries, our delivery to any bank account, 7 billion bank accounts, which I said 2.1 billion mobile wallets, we demonstrated last year, this year, 97% of our transactions were delivered to a recipient bank account or mobile within 1 minute. And that is what I think the larger banks, and our partners like, and all our partners here work with us. I think that is the key piece of it. So liquidity. So when you talk about the bank in New York, is exactly trying to do that. Is trying to look for, as you said, cutting down the liquidity position from 3 days to 1 day. We did that already real time. So for me, digital assets, absolutely welcome, because the platform is built for that. I think the idea for us has been collaborative. It doesn't matter what kind of payment instruments are coming. It's a card network coming in, it's a wallet, or the digital assets coming in. What we are trying to solve for is not that messaging system, but actually the trust where the money is able to be delivered real time into the consumer's account. Once we do that, we solve for everything.
Sorry, if you don't mind, if I can
Please
just
go
follow
ahead.
up on that. I think, and you've been humble. I think if you look at that, we partnered with TerraPay for Southern Africa, and if you look at that, we didn't need to use a technology. We didn't have to go in and say we want to use DLT. Yet that solution is real time clearing and settlement across all the currencies of the 16 countries, settled immediately. So you solve both those problems. You solve the liquidity issue and you solve the clearing issue. And we've been able to do that together at a $2 cost. So I think that's the kind of emergence that needs to happen. Are we there yet? Is there usage we'd love? No, but I think it's foundational.
Yeah, and I think that's an important point you're making, which is to say that the technology is incidental to what needs to happen. Whether it happens through DLT or anything else doesn't really matter till such time the objective is achieved. Shobhit, you want to add to that?
Yeah, I think just want to bring in one other perspective to this conversation. Liquidity thing about what Annie said. Mostly we're talking about P2P transfers, going from one person's account to another. There's also a huge segment that is happening from consumer account to merchant accounts, and there are established systems and rails where such as Visa, MasterCard, proliferated around the globe, where the merchants are already within an ecosystem of working with their local banks, and the settlement cycles are defined. Now that is already T+1. Now there could be a consumer either physically or on their web store coming in from any part of the world and seamlessly able to transfer that money, or again, that promise of getting that money T+1, obviously that part has been solved there. So it's a defined cost, defined timeline that has already been said. But is it good enough for P2P remittances? That's the bigger part, and that's growing as we speak, manyfold, as the world kind of comes together.
No, absolutely. And I think this nicely leads me to my next question, which is, Annie, you spoke about the trust deficit that exists in the society in general, and certainly in the cross-border payments. And as most central regulators, their primary objective is to kind of make sure that the promises are upheld. To make sure that there is no ill money in the system, making sure anti-money laundering happens, making sure no terrorist activities are getting financed, and so on and so forth. And hence this cost of EDD, or the extra due diligence, results into the charges of the cross-border being higher. And further, if I was to add more to what Shobhit is saying, which is a B2B transaction, and now we have to bring in yet another element of refunds and the recalls of the product and the product delivery happening vis-a-vis the payments. I'd love to understand from you folks as to if you've seen any robustly implemented extra due diligence frameworks or whereby we are able to achieve both in spirit and in ink, the compliance, while keeping the cost down, right? Because we have to, in that capacity, work with both. Himraj, do you want to go ahead for that?
So when we are talking about the cross-border payment, of course, the compliance is the primary focus for each and every operator. So we have to make sure all the transactions are checked, all the identifications are checked, all the person who are involved for whole ecosystems are clear. There is no any illegal activities are doing. So that's why we as a organization, IME is using the robust technology to make sure all the information, all the transactions are properly verified. We have developed the system, which is very automated system, which is generating the scoreboard into our dashboard, which will define the risk category of the transaction for each and every transaction. So when the customers are sending regular transactions, their risk category is already going up. When the amount is high, the risk category is already going up. When the multiple sender, similar receiver, or similar sender, multiple receiver kind of transactions are going into the system, the category is already defined by the system. So to make sure the the entire network is protected, we have been using different kind of technologies, which is directly checking from the server, and which is also providing the real-time solution to make sure the users are basically having the good information to control that transaction. So compliance is the key for the cross-border transactions, and to make sure the compliance is properly done, the cost of the compliance is also increasing nowadays. When we are talking about the transaction cost, in one way we wanted to reduce the transaction cost, but in another hand, the enhanced due diligence cost or compliance cost is increasing. So there is a challenge for that. Having said that, to protect the cross-border payment, the compliance is the key, and we have to make sure all the latest technologies are used to consolidate all the data in one single group, so that there is no compromise in the cross-border payment from the compliance perspective. That's what we are doing now.
No, that's a good point. See, I've always felt that the risk profiling domestically is easy, right? But what tends to happen is, can we call for a passporting of, risk profiles, right? Can we call for, if I am trying to send a transaction to somebody in South Africa through my network, is it possible for me to tap into something that you would have a better risk score as a recipient of that individual? Is it possible for me to passport onto that risk profile? I'm not too sure about that, because take a lot of collaboration. But I think that's where the real innovation can possibly come in, whereby once it's like passporting your KYC across banks within the same jurisdiction. Once that comes in, I think there's a possibility of maybe reduced cost and a much more robust cross-border financial ecosystem. Shobhit, you had something to add to that?
Just again from a perspective of keeping the cost low, right? I think you have to draw a line as to what you can build in-house and where you need to go outside and rely on the specialists. You can't build everything inside. And if you are, then your viewpoint is limited to data that you have. So as you said, right, like it's very collaborative. So you have to figure out the right technologies, platforms to be able to bridge that gap and not reinvent the wheel necessary, which is where an orchestration platform for e-commerce merchants comes in, because we sort of connect them easily to multiple providers across the globe, which could be fraud solution providers as well, so as to keep the costs low. Ultimately, we know that cost is going to get passed down to the consumer. So it's very important as a business to safeguard that, and that essentially becomes your moat and competitiveness. Yeah.
While we discuss all of this, we also understand that United Nations, one of the sustainable development goal is to keep the cost down of international remittance, bring the cost down of international remittance by 2030 to less than 3%, and eliminate corridors altogether whereby the cost of remittances are more than 5%. And of course that, and this is slightly counterintuitive, because by the very construct of the fact that we are running for-profit organizations, we have to make money for our stakeholders and so on and so forth. But at the same time, from a humane standpoint, it's obviously essential that immigrant workers who are sending money back home for their kids' education and for the family maintenance don't have to pay exorbitant money while those transactions happen. Martin, I know you work a lot with immigrant population or through your banking partners. Do you want to shed some light about how have you seen this industry evolve, and where do you see this going, please?
Yeah, I can obviously only speak for my region that I'm familiar with, and we did quite a lot of research in that area, but maybe as I mentioned some things, it'll probably ring true for people, around their situations. But if you look at that SADC region and the movement of money, our research showed that the most expensive transaction cross-border is about 18.7% of the value of the transaction. So now you're having people that probably can ill afford it, giving away 18% of the value of what they're sending home, most times for food and education. The interesting part is that there were some that were 0.2% of the value. And so it's this huge spectrum of what is happening. Now, it was interesting you mentioned about, so we all run businesses and there needs to be profit made. I think we can, again, maybe take learnings from what has happened even in terms of how the payments world expanded. Less than 20% of the movement of cross-border cash in the SADC region is formal. So we talk here about compliance and regulation and all that, yet we're catering for under 20% of the volume. So if we solve for the problem, we make these transactions more affordable. There's actually 80% of that market that's untapped. This is money that's going across the border in trucks, in taxis, in other things that I've learned along the way, where I give you money here and your brother in that country gives my cousin money and things like that. So the point is that there's a bigger chunk of this pie that is untapped. And if we can solve for people to actually use the ecosystem, there's money for everyone. And it doesn't have to be that we abuse the few with high charges. And it's normally those few are the ones that are actually trying to comply to the rules of the game.
Yes, I would like to add a couple of pointers here. So I think we heard about money movement. Martin was talking about 18% on one spectrum to 0.2% on the other side. I think the key difference out here is, and when the World Bank talks about bringing the cost of transaction from 8% coming down to 3%. Incidentally, the IFC, which is part of the World Bank, is an investor into TerraPay. So why would they invest into us? They're not a so-called private equity player. And the answer was very simple, is when you look at that 18%, I can guarantee you, Martin, all those transactions are actually cash transactions. And to what my friend out here was talking about, the cost of the compliance itself absolutely goes high when you touch cash. India is a great example of what digital transactions can transform. So when you speak about the 0.2%, it's actually not even 0.2% cost in India. It's actually lower. As a co-founder, I don't make a lot of money out here. Yeah, but the fact is, it is because the cost of that transaction, because it is 100% digital, brings eventually the benefit to the consumers. So the whole idea behind where the World Bank talks about, it talks it from how cash transactions, and I think you have seen this in Nepal as well, where there's a transition happening from cash to digital. It's in every part of the world. We operate in Africa, we operate in Europe as well. I can tell you, if you want to send a transaction from anywhere in the world to Europe, it will be cents, actually, including real-time settlement, real-time KYC, real-time AML checks. What really happens at the back is, you have banks and everyone, kind of want to do what they have to do. But the fact is, the overall infrastructure, when it is real-time, when it is digital, brings down the cost of transactions. So our advocacy to the world has been, make it digital, and there is no country better than what we see here.
Sorry, Annie, and just to highlight what you're saying, out of that research, only 5.2% of transactions coming in and out of South Africa were digital to digital.
There you go.
So that talks to what you were explaining.
No, ultimately we come back to the same thing, which is the great work that NPCI has done. And I was talking to Martin yesterday, and I was saying even needy people asking for alms on the road are carrying QR codes and saying, you don't have to give me cash because you're certainly not carrying any, but you can scan your phone pin and pay for that. And you buy 10 rupees of flowers outside the temple to offer to the god, and they're taking digital payments, and that's truly been transformational. I'm just going to ask one last question, and then we can wrap up the session after that. We are all, we try to build systems which have a great user experience. India operates in an environment where average age is 29 years old, and people like instant gratification and convenience and transparency. And there are two ends of the spectrum where you can make a transaction extremely compliant, but it's going to be a horrible experience, right? It could be entirely physical and in person and so on and so forth. On the other hand, you can make it extremely real time and great user experience, but might not have a very stringent compliance standard. I like to ask Shobhit, because he works with a lot of e-commerce players, as to, how do you strike this balance of providing a great user experience to the user, which is what all of us are trying to strive to bring, whether it B2B payment or C2C, while ensuring that the compliance is kind of still taken care of. How do you achieve that?
Right. I think there are different segments out there, clearly even on the consumer to merchant payments, as well as peer-to-peer payments. So you have to build the right experience for the right segment, and each segment may have different requirements, right? So I used to, I spent about 6 years in Singapore. I used to remit money into India, right? I used DBS, realized super expensive. takes time as well. There are a lot of startups experienced. Obviously I need to go to their office to do KYC once, but that was it. All of my remittances after that were through that startup, and it got to a point where it's now almost real time, and now UPI and Fast are anyways connected, so it is real time. So gradually it has changed, and so is on the merchant side. There are experiences that as a consumer that are coming and repetitively checking out and buying. So you have a pattern of consumer behavior and you build to that, right? There are companies here which extend credit even on taxi, right? So you're not collecting the payment essentially at the same time, and you're dealing the service delivered and the payment. So obviously there are a whole lot of cases there, which you have to understand what you're building for, and if you are clear as to who and what you're building for, then that experience can be delivered.
Last question, Annie, for you, and we'll wrap it up after that. Even the governor today spoke about CBDCs and how a lot of governments are moving towards centralized digital currencies. And then we have systems like UPI, which is not just trying to be domestic now, they're trying to go international and really connect the real-time payment systems of the world. If we imagine a scenario whereby the CBDCs flowing on interconnected rails such as UPI, what does the world look like for you and me? What role do we as organizations have to play if everything is digitized, moving on UPI and in the form of CBDCs?
It's a great question. I think the way we look at least in a money movement, it basically has two aspects as we spoke about, and I think the liquidity piece becomes extremely important. But for me, what we only future-proofed our business in a way. What I mean by that is, in markets, Singapore is a great example, which has opened up already to digital currencies and opening up multiple use cases. Our platform is already ready to enable and embrace that. I think where we come in, we will be, my son actually asked me, what do I do? And it's extremely difficult to explain all this. So what I tell him is, we are the plumbers for financial services cross-border. And I think that will continue to happen. There's no Visa and MasterCard continue to operate. And I think what we are creating is that plumbing network for bank accounts and mobile wallets and how interoperable they can be. And on the front end, as you said, is like all these the digital assets, they will come in various forms. And I think we are just scratching the surface right now. It will evolve. I think, and I think we will evolve as well. Eventually, what is really going to come again, I'm gray-haired. The only thing which will come on the forefront is trust of how customers and consumers look at moving money, and then how the regulatory environment looks like. So I'm going to leave it there, but I think if there is anything apart which you would ask me on the digital side of it, I think every enterprise, every infrastructure should be ready because it is coming. It is coming. It is going to come in slightly various nuances as we grow. We need to embrace it.
Just to add that one, when all the central banks platforms are coming to the single platform or connectivity or connecting by the API, I think a lot of things can be happening in terms of compliance, in terms of transparency, in terms of controlling each and every aspect of the life would be much more easier. And I think we as a platform will have much more leisure work, and as you mentioned, probably our hair will be black in terms of time. Thank you.
I know we are over time, but do we have time for one question, perhaps? Yeah, sure. Any
we can
questions
take just
for anybody?
one question if we have one. Please do raise your hand. We can bring a mic over to you.
Okay, I guess no questions
I
then.
think everything was so crystal clear. Nobody has any more queries here. This was amazing, and so a big round of applause to this panel, ladies and gentlemen. Thank you so very much to each and every one of you.